give me a general sentiment check out there right now. Where do you see equity direction moving from here, particularly if we see another rate hike coming this month from the Federal Reserve, but more talk increasing that we are on track now for a pause for the rest of the second half? Your view?
Good morning, Dan. Yes, and I think what's really interesting when we take stock of what's happened in the first half of this year, actually equity markets are up double digits, and I think it's very prudent to think about protecting those equity returns at this particular point in time. With regards to the Fed, definitely a huge sigh of relief when it comes to the CPI print for June, really lower than expected, and the key thing there being that actually core inflation actually did come out lower. Having said that, they're going to stick to their dot plot because core inflation, although it has mediated, is still way above their target of 2%. And so as a result, they will continue to raise rates. And I think this is really the key issue here, is understanding that balance between, trying to mediate inflation and keeping us on track there versus growth expectations. Our key view is that we are likely to have a slowdown in demand continue, but rates are continuing to go up. And that could potentially be a policy mistake, but we don't know yet.
Indeed. And as you say, this disinflation trend remains intact, though. Investors certainly see that as a positive. What do you think it means for equity positioning from here? How can investors take advantage of this disinflation trade, as it's being called?
Yeah, so I do think our sentiment indicator actually is in euphoria. So this is still an overall okay environment to be owning growth assets, equity in particular, but certainly does indicate a level of complacency. So when we look at future expectations of equity volatility, currency volatility, it's quite low, particularly when you compare it over the last 1 year. So actually now is a very good sort of strategic point to think about adding protection, whether you use options, whether you use low volatility equities to try and protect. I suppose what I'm saying is there could be a correction on the cards over the next few months, just given the extent of the rally and still ongoing risk events on the horizon.